everyone. My name again is Kafi Hakin. I'm happy to meet all of you. Why is accounting necessary? Accounting is necessary so that, as you guys know, you want to track your income and expenses, but there's a lot of things that goes into knowing your numbers. It's understanding how much income you've made. It's understanding how much you're spending to produce your product. And even if your product is new, your knowledge or information, how much time are you spending creating that information? What's the cost and value of that? How much would somebody pay you to do that? And then another good way of looking at just expenses as a whole and thinking about what the value is, how much, if you're doing your business as a job now, how much are you being paid, or how much would you ask to be paid if you were doing this as a 9-to-5 job? That's kind of like a broad view. You want to track your income and expenses. Right now, in the beginning, you're going to have more expense than income, obviously, but that comes down to traveling to workshops, that's buying books that are giving you more information about your business. There's so many different things that go into building your business, even if it's just informational, just getting to the point where you're ready to make income. You want to track all of those things. You want to be able to budget for your immediate and future needs. If you're planning to do a huge program next year, what is that going to look like next year? How much income do you need to have to make that program come off? So you have to plan and prepare for that. Let's say if we're all starting our LLCs in 2025, but you spent money to print business cards, you spent money to create a logo, you drove your car back and forth to meetings, maybe you're meeting with other entrepreneurs, you're networking. All of those are business expenses that you want to track, even if you don't make $1, because that could help offset your other income. As small business owners, typically for taxes, you report that on your personal income tax return, even though it's a business, even though it's an LLC, which is separate and protected from your personal assets. For tax purposes, generally, you will report that with your personal income. If you have a W-2 job or if you have a 1099 job currently that's separate and apart from your business, you would generally report that all together on one tax return. So you want to keep track of everything you're doing from day one till the end of the year. And a fiscal year is January to December. So sometimes I get questions about, well, I started spending money last year in 2024, so can I just report all of that together with 2025? No. Once December 31st ends, that's the end of your fiscal year, and that closes that year, and you have to report it on that year, or you pretty much lose it. So you have to think of your tax year and your financial year in terms of January through December. Now, there are some options for that. You do have options of changing your fiscal year, but normally for the most part, most business owners use a calendar year, January to December. Every now and then, certain companies, and usually it's nonprofits, they have fiscal years, like the city of Philadelphia has a fiscal year of July 1st to June 31st, and that has to do with how their funding comes in. But for the most part, we all are going to be calendar year people. So with that being said, you want to track your income from January to December, and you want to track all of your expenses from January to December. And with that, that will help you make decisions on what you're going to do from day to day. The decision-making can be for today or tomorrow. The decision-making can be for the next 6 months, or it could be up to a year, 5 years, however, planning. Knowing your numbers helps you make those decisions. And we do this in our day-to-day life, in our household. When you budget for your monthly income, that's the same way you're going to budget for your business. You want to track and plan how your income is going to come in, and track and plan how you're going to spend that money. Understanding your numbers will help you understand the trends of your business. Your business may If it's education related, your business may fluctuate according to the school year, depending on how it's set up. If it's set up to flow with the calendar year of school systems, your business may be seasonal in terms of maybe you have more sales in the summer, depending on how your business is set up or what your industry is. For me, obviously, tax season, my business is very busy. My income is higher during the months of January to April. And then there's other spikes depending on due dates. We have extension due dates. So there's a spike in September and October. So just tracking your numbers will help you understand the trends of your particular business. And everybody's industry is different, but you should know, okay, when are those times when there's highs and lows, and you have to plan so that the times when those lows come, you can still keep your operating expenses going. You can still pay your office rent, or you can still pay your virtual assistant to keep working because you've understood the trends and you've been tracking and planning and understanding that, okay, I need to make sure my cash flow or my cash reserves are going to sustain me through those ups and downs of the business. And one of the most important things that tracking your numbers and understanding your numbers will do is help you apply for grants and loans and financing. There's many grants available in the city of Philadelphia right now, and national grants that are going on for small businesses. The first thing they ask for is financial statements. Your financial statements are composed of your profit and loss statement, your balance sheet, and sometimes they also ask for a cash flow statement. So I'm going to show an example of those, the balance sheet and the income statement. I want to show an example if you've never seen one. But this is just an overview of why is accounting necessary. Accounting is the tracking of your income and expenses. That's pretty much what bookkeeping entails. You keeping your books, you tracking all the income that comes in, tracking all the expenses, all the dollars that go out. And at the end of the day, what's the net difference of that? That's either going to be your profit if it's a positive number, or that's going to be a loss if it's a negative number. So accounting basics. The importance of a business-only bank account ties into how you track your numbers. I'm assuming everybody here, and I think as part of the program, you have to open your business bank account. You need your business entity paperwork, which is the LLC. You need your EIN number. And if you're setting up an LLC, you also need an operating agreement. I know I spoke to a couple of you who may have already had your LLC set up, but you didn't have your operating agreement. So we're working on that. But the operating agreement is your legal document that represents how you will run your company. So this is especially important if there's more than one owner. When there's one owner, it's a little bit more simpler. But if there's one, two, or more owners, operating agreement discloses what happens if one of us wants to leave the business, one of us happens to pass away, one of us wants to sell our shares in the business. So the operating agreement just details what's going to happen. Your operating agreement may say, okay, if somebody dies, this business immediately closes, it ends. Or your operating agreement may say, okay, if somebody passes away, then your share of the company will flow to your heirs. So the operating agreement details what's going on in the company legally, how it's going to be ran, and how business is going to be done, how income is going to flow to those individuals. If it's one owner, it's really simple because it's just you. So it just says that, okay, if something happens to be my company ends, or my company, you could say that your company will carry on to another person if you want to put that in your operating agreement. So you need your operating agreement, your EIN number, and your LLC paperwork to open a bank account. Okay. Then once you have that business bank account set up, it's very important to have all of your income and expenses flow through that bank account. Keep your business activities completely separate from your personal account. Your accountant will be very thankful that you do that because it's not a lot of income over here, expenses over there, accounts all over the place. It makes it very complicated to prepare your taxes if the information is not orderly, and it also makes your tax preparation fees go up because it's a lot more bookkeeping. It's a lot more managing. It's a lot more organization information that has to be going through. So it's very important for you to keep those things separate. And also, when it comes to if you happen to be audited by the IRS by, some random chance, if you don't want the IRS looking through your personal information, you want to say, okay, here's my business tax return, here's my business bank account, all of that is everything ties out. If it's very disorganized and you have information all over the place, that just gives the IRS reason to look further and deeper into your accounts. Well, if you have income in your personal account and expenses in your business account, what else is going on in here? So, it gives them a reason to ask questions. So you just want to make sure everything is really organized. And I know that's kind of challenging, but if you start in the beginning, it keeps it really simple because in the beginning, you don't have as many transactions. And then as you grow and get more busy and a lot more business activity, if you're already in the habit of using that business account, it makes it really simple. Setting up an accounting system. So once you have your business bank account, you're ready to set up an accounting system. We need a system for tracking all of income and expenses. Once you have your business bank account, that's a great first step, but now you need something to track everything. Systems that are out there are QuickBooks, FreshBooks. Everybody has probably heard of QuickBooks. FreshBooks is another one that's very simple and easy to use, and I think FreshBooks may be a little bit less expensive than QuickBooks. Most of these have a monthly fee. It's a subscription. I believe Zero or Wave might have a free option, but most of them are going to be in the range of like $35 to $60 a month, depending on what version you use. I would recommend spending more than $60 a month. QuickBooks I know has other options that are a little bit more expensive, but nobody on this call needs those options. They give you a lot of extra bells and whistles that most people don't need right off the bat. Pretty much everything you need is going to be in like the plus or the premier option of QuickBooks. But it's very useful to have a QuickBooks or FreshBooks. You and your accountant can both access the system. It's something that they make these softwares so that the business owner can use it. They don't make it so that it's so complicated that you have to have an accountant. But these systems connect with your business bank account and download all the transactions pretty much every day. Whenever you go into the system, it automatically syncs and downloads everything into the system. You just have to go in and categorize the items. And what I mean by categorizing is the system will draw the information from your bank account, but it may not know whether this check was for supplies or bookkeeping. It might not know if this withdrawal was for a bank fee or was it to pay for a seminar. QuickBooks does start to understand your spending habits and starts to automatically code things for you, but it takes some manual work from you in the beginning, getting it set up, and then QuickBooks will start to, I remember last time you coded this to supplies, so this must be supplies. So it starts to learn where you put things, and it makes things a little bit faster. But using the accounting system, one of these online-based accounting systems helps make your bookkeeping a little bit more automated, and it helps you either if you want to do your books yourself, you can, or you can hire somebody to help you navigate QuickBooks and create monthly reports for you. At the very least, I recommend using an Excel or Google Sheets to track your income. You don't necessarily have to invest in an accounting system. Excel and Google Sheets works great. If you're good with Excel, it's not I usually provide people with some sort of template and they can put in their income and expenses. But if you're good with Excel, you can probably just create something that works simple for you. The most important thing is that you have something to track your income and expenses. Um, Use the Excel spreadsheet to type in when you make a sale. Oh, I made a sale today. It was $500. If you make a sale 2 months later, okay, November 1st, I made another sale of $500. So that at the end of December 31st, the year is cut off for 2025. Okay, what was my total income for 2025? You have everything listed and you could just total it in Excel or Google Sheets. And same thing with your expenses. As you're spending, if you're just using something as simple as Excel or Google Sheets, that's fine. Every time you spend, you log it into your Google Sheets. I bought supplies. I paid a helper today. I bought gas. You list that all on your spreadsheet, and it can be total at the end of the year. You can sort it and provide that to your preparer, or use it if you're self-preparing. Monitoring your income and expenses with financial reports. We're going to get into the financial reports, and I'm going to show you the profit and loss in the balance sheet. Some of you, if not all of you, may need to create invoices for your services or your businesses. And that's another way that you track income. And there's a reconciliation process that goes along with that. But you want to invoice for your services that facilitates you getting paid. And you want to make sure, you want to know whether your service is subject to sales tax. I don't think anybody that I've seen thus far in your business group has a product or service subject to sales tax. But if you actually sell any products, sometimes we have a product piece of our business. Like, for instance, accounting services is not subject to sales tax. However, if I produced a book or a workbook or a pamphlet and sold that product is subject to sales tax. So you just have to, I did put a link in here, and I'm going to share this with Deandra so you guys have access to it. And actually, I could put it in the chat. But just know whether your product or service is subject to sales tax, because if you're in Philadelphia, that's 8%. And if you're in the county, it's 6%. And so that means that if what you sell, you just have to add the tax onto it and collect that from the customer. So if your product cost is $100, you're collecting $106 from your customer and sending that $6 to the state. And so that's how the sales tax works. So just make sure if you invoice accurately, include the sales tax on that invoice if it's subject to sales tax. Otherwise, you end up paying that sales tax out of your pocket. And you don't want, the tax is not on you. The tax is on the customer. You're required to collect it. So if you do have some sort of product based in your, like a tangible product in your services or in your product line offerings, make sure you look into the sales tax and collect the appropriate sales tax and keep records of business expenses. I wanted to reiterate that all sales are recorded as income. I only say that because sometimes people might think, oh, well, if this was a cash sale, that's not really reportable. Or if this sale is off the books, that's not really income. All sales are recorded as income, including cash sales. And I recommend providing receipts to customers for accurate bookkeeping. So if someone pays you electronically, you can send them an electronic receipt. If someone pays you cash, you can also send them an electronic receipt, or you can write out a paper receipt. But you want to have that documentation. What's good about using an accounting system like QuickBooks or Xero is that you can do all of your invoices within the system. You can email that invoice to your customer. Most times they can click on it and pay you, and that money will go right into your bank account. That's how most of those systems work. So it just makes your business run better. Invoicing the client, okay, you provided a service or you're going to provide a service. You send them that invoice electronically. They receive it. Oh, okay, this is the invoice from Nika. Let me click on that, pay that, and then that money is direct deposited into your bank account. The processor may take out their fee, but you got paid. That whole transaction only took you doing one step, send the invoice, and everything completed in one step. So that's one of the benefits of an accounting system. They got their receipt, you got your money, and it's all recorded with the invoice and your internal receipt tracking process. Keep track of your costs that go into producing your product or service. So this entails you, again, let's assess what's the cost of my product. So this might mean you looking at how much time you spend creating your service. I don't know if it's you spending an hour performing a service or a couple of hours, or are you presenting a workshop. So you have to look at the time it takes to produce that product, whatever your product is, and assign the dollar value to it. Once you assign the dollar value to how you produce that product or service, that will feed into how much you're going to charge. Because if your time is worth $100 an hour and it takes you 2 hours to produce this product, produce this program, and at the very minimum, you have to charge $200 to give that to the people at the very minimum. So that's how you come up with your break-even cost. Now, obviously, we want to make a profit, so you want to add on to that $200 cost so that you can make money, because you're in the business to make money. So you want to look at those things, look at all the costs that it takes to go into doing what you do. Even though we love what we do, we want to make sure we're accurately costing. And sometimes it's hard when it's a service business, but you have to look at, okay, what was somebody paying to get this product? And how much did it cost me to generate this? How much time did it take? How much effort and education that I have to put in to getting this to where it is? And you have to accurately value that. And so it's very hard with services, but you have to, with services, I find that it's easier to see what other companies that you're competing against, what they're charging. If there's nothing exactly like that out there, look for something similar. Also, you can talk to your friends and family. What would you pay for this? Or to talk to other people in the industry. What would you pay for this if it was on the market or if it was offered? So that's how I recommend you work your pricing when it comes to servicing. So I'm just going to go further into some steps of record keeping and why it's important. I call this my 3 A's for quick and easy bookkeeping. First, we talked about the apps. There's many apps that'll make your record keeping simpler. And what record keeping is, to sum it up, it's your audit protection. It's like your audit insurance. You having records really protects you when it comes to dealing with the IRS. It protects you when it comes to dealing with your customers. So your record keeping is your insurance. It's your paperwork. It's your documentation. It's your proof of everything. So you want to record and document as much as possible. And there's so many apps out there to help you do that. There's some free apps and some apps that have low cost. Receipt apps are very helpful because I try to eliminate paper as much as possible. I don't know about you guys, but as an accountant, we love paper. Like, we have piles of paper everywhere because we deal with tax returns, financial statements, people's receipts. So I have to force myself to get rid of paper because we love paper. We love just documents. So when it comes to receipts, I recommend my clients use an app that they can take a picture of the receipt and then they can throw the receipt away. Most of these apps, when you take a picture of the receipt, you code it. Okay, this receipt was for supplies. This receipt was for, I bought food. I went out to a business lunch. You can code it to what it is and who it was for, and then you can throw it away. Some people like to keep the paper receipts also as a backup, but most accountants, and I think almost all at this point, don't want a bag or box of receipts. Like, we don't want to go through that. We just want, okay, these apps, the Hurdle, the Smart Receipts, Nerd Wallet, and there's many, many more. There's newer ones out now. Um, Once you capture all those receipts at the end of the year, you can just send that report to your accountant. You can use your phone and say, okay, all those expenses for the year. If you're just using a receipt app, you can just shoot that receipt app to your accountant or to yourself if you're self-preparing your taxes. And you can use that to create a financial statement if you needed to, if that's all you're using. But keeping receipts, it creates clutter and it kind of creates like madness, because at the end of the year, if you have to go through a whole year of receipts, you're not going to want to do that. And then your accountant is going to charge you a lot of money because they charge by the hour to go through receipts. So you don't want to get that kind of, to have to go through receipts. So I recommend use some sort of system, take a picture of the receipt and throw the receipt away. Or if you want to keep the receipt as backup, keep that in your nice little annual expense folder where you throw your receipts throughout the year, but you've already taken a picture and you've coded it, so it's fine. Mileage tracking is very important because that can lead to a huge tax deduction at the end of the year. So there's several mile tracking apps that you can use, and what happens is when you're going on a business trip, and what I call a business trip is I'm getting in my car and I'm going to the post office. That's a business trip. I'm getting in my car and I'm going to meet a client. That's a business trip. So you can pretty much keep that mile tracker on at all times if you're doing your business on a regular basis, because every time you're going from point A to point B, that's a business trip. Now, keep in mind, your regular commute to your 9 to 5 job is not a business expense. We have to keep those separate. The IRS does not allow us to deduct mileage for our jobs anymore at this time. So you want to keep your mileage tracking to just business purposes. In the beginning, that might be hard because you're doing both. You're working and you're also running your business. So you have to kind of keep track. Sometimes it's 50-50. Okay, I use my car 50% for my personal commute and everything, and then I use it 50-50 for business. So you can do that. But when it comes to the IRS, in order to deduct mileage, they require tracking. Because if you're ever audited, they want to see, oh, well, I want to see your mileage log. Where's your mileage log to prove these miles? It's rare that you get audited, but it does happen. So this is just your audit protection. And we talked about all the payment apps, Square, Stripe, PayPal. These are just things to help keep your records for you, help tracking income, and then, of course, using your accounting systems, QuickBooks, FreshBooks, and Xero, and others. Assistance. Hire a professional for assistance is my recommendation, because as you can see, the accounting can be very technical. At the very least, get a consultation to make sure you're going in the right direction. And utilize all of your resources, even if it's just monthly or quarterly, to meet with the accountant to say, okay, I know I might not be able to afford to have you on a monthly basis, but I would like to check in with you quarterly just to make sure I'm going in the right direction. At a very minimum, annual. Some people are not able to meet but once a year, but quarterly would be good because things come up throughout the year, and then you meet with your accountant or tax preparer next year when the year is over. And once the year is over, there's not much planning that can be done because your books close at December 31st, and then it's a new year. So I would say at a very minimum, meet with an accountant before the end of the year just to see, is there anything I can do before this year closes to put myself in a better tax position for 2025. As hire a professional for assistance, get help setting up your system properly, or have someone review the current system that you're thinking about using. Just say, hey, do you think this will work? Am I going in the right direction? And get some feedback from them. Utilize your free services. That's what I was going to say. There's a lot of free services and organizations like the Urban League that offer support